The ICT New York Kill Zone is one of the best strategies out there. It forms nearly every single day and gets you consistent profits, meaning that you can pass your funding challenge. In today's video, I'll be fully helping you guys break down the ICT New York Kill Zone strategy, breaking it down step by step, explaining how exactly it works and how you can use it to pass your funding challenge. Now, first things first, the ICT New York Kill Zone is a time-based strategy, meaning you can only trade it within a certain time period, like right over here. Now, the ICT New York Kill Zone is based on identifying liquidity, waiting for a higher time frame order block or imbalance to be filled, and then looking for a lower time frame entry. Now, first thing you want to do, as I said previously, is identify liquidity. After we've identified liquidity, you can see we have these equal highs here and we have this low right here. You want to do this before the New York Kill Zone time, which I'll show you guys later on. But what you want to make sure is that you identify before New York Kill Zone. You can do it even during the New York Kill Zone, but it's preferably that you want to identify before the New York Kill Zone. Now, after you've identified liquidity, the next thing you want to do is wait for a liquidity sweep. Now, if we have a liquidity sweep of these highs right here, for example, we'd want to short the market. Why? Because when price takes one side of liquidity, price will then go on to take the next side of liquidity, which is why when we have price take out low, we target the next equal highs as opposing liquidity. Now you can see right here, we have our liquidity sweep right over here, this low, meaning that we now want to long the market, obviously based off a lower time frame entry. But first things first, because this is the New York Kill Zone strategy and the London Kill Zone strategy is exactly the same, we want to wait for price to tap into a higher time frame imbalance or order block. It doesn't necessarily need to respect it completely. It can go out of it a little bit, but you want to make sure it respects it relatively. So you don't want it to go crazy and break out of the zone. You want it to somewhat respect you. So right here, we've identified a higher time frame imbalance / order block, and obviously you do want to make sure that your order block or imbalance is valid. Don't go for not valid imbalance or order block. That'd make no sense. But once you've identified your higher time frame imbalance and order block, you want to wait for price to tap in after you've had your liquidity sweep. Now, something that's very, very important, if we have a liquidity sweep to the downside, as you can see over here, we want to look for a bullish order block or an imbalance. Again, it can't be bullish or bearish, doesn't matter, but you want to look for an imbalance too. Now, if we have liquidity taken to the upside, we want to look for a bearish order block and obviously a higher time frame imbalance. Now, after we have a higher time frame imbalance and order block, price taps into that zone, the next thing we want to look for is a market structure shift with imbalance. Now, obviously, I can't show you guys on this chart right here. I'll show you on the live market example, but we want to wait for, similar to the silver bullet, a live market structure shift with imbalance and also displacement. Displacement, for you guys that don't know, is simply when price moves strongly with a series of candles. So price has a lot of volume and it moves strongly, breaking price, which is why we call it a market structure shift. Now, after price gives us a market structure shift, we want to identify our imbalance and then we want to enter off of our imbalance. Now, obviously, the next step is very, very straightforward, and that's simply identifying opposing liquidity. You can see right here, we have these highs that we marked out previously, and we'd obviously target this, or you could target some higher time frame form of liquidity, like a high, even some equal highs right above here. Now, for the times it forms for EST time, which is New York time, which is UTC -4 on TradingView, it's 8 a.m. to 10:30 a.m. And for UK time, it's 1 p.m. to 3:30 p.m. GMT time, which is London time. And for the pairs it works on, these are the pairs that I've tested on. A lot of people do say different stuff for pairs, but to be completely honest, the pairs that it works on is preferred to your trading. So this could work for you for GJ example. You need to test it yourself and back test it yourself and see the pairs that work for you. But if you want to use my trading strategy, these are the pairs that I trade and these are the pairs that I've seen it work best on. Now, what I'm going to do is I'm going to go on a live example and break down the New York Kill Zone step by step, explaining why exactly I took the trade and how exactly I took the trade. But before I do that, if you're looking to get funded on your prop firm account completely guaranteed, or you don't pay a single penny, make sure you check out the link below in the description. We will pass your funding challenge completely guaranteed, or you don't pay us a single penny. You can see right here on the 10th of October, this is an account that we previously passed. You can see we passed it very, very quick for one of our clients, and our client is now funded with 100k worth of trading capital that he can now trade. If he hits a very nice 1 to 10 risk reward trade, that's $10,000 from one singular trade. Not only this, but we also give you completely free high win rate signals to use on your account, essentially giving you account and then giving you very, very good trades to then use in your account to then get payouts. But the amazing thing about this is you only pay once we pass your account. Again, you don't pay us a single penny until we pass your account, essentially making it a zero risk because you don't have to give us anything before we even start. Alright, so I'm here on NAS 100, which is a pair I told you guys you can trade. I'm going to explain exactly why I took the trade. I'm going to break down and how exactly you can replicate trades like this. Now, first things first, we want to make sure that we are trading within the New York Kill Zone time, and that's 10:30 EST time to 8:30 EST time to 10:30 EST time right over here. You can see I'm on UTC -4, meaning that I am in New York time. Now the next thing we want to do is we want to identify our liquidity right over here. You can see we have these equal highs right here, and we have these equal lows right over here. Now when we play the market, what we want next is a liquidity sweep, and you can see over here we have had an amazing liquidity sweep. Price absolutely melted the market and shot all the way down here, taking this liquidity, taking these equal lows, and taking these equal lows. Now the next thing we want to look for now is we want to look for a higher time frame imbalance or order block that we can now enter the market off. Not enter the market off, but using confidence for our trade, so we can go on a lower time frame and then enter the market. That you can see we have an order block here and we have an imbalance right within here. Apologies, right within here. Now the next thing we want to do is we want to now drop onto the lower time frame and identify a market structure shift of our most recent high. You can see this is the high. I'm going to be looking for a market structure shift right over here. Now if I play the market, you can see we've had a break of the structure right over here. Now it is somewhat of displacement. A lot of people might say that this isn't displacement, but in my opinion this is displacement. Why? Because we have a series of bullish candles right within here. Now the imbalance that I would mark out personally is the most earliest imbalance that caused this market structure shift, which would be this one right over here. Now in regards to entering, you can enter off of this one right here, which would be this one, or what you can do is you can enter off the 50%, which is simply getting your Fibonacci tool and marking out price like this. Now if you've watched my previous videos, you do know that I like to enter off the 50%, so my entry would be right here in the middle, looking to long the market here. Now in regards to stop loss, your stop loss needs to be above or below the swing high or swing low. Okay, it's simple as that. Don't make your stop loss here. You might be safe and you might get a crazy trade like a 1 to 200, but you're more than likely not going to get stop loss. You want to make sure your stop loss is below or above the most recent swing high / low. Now after we've identified our market structure shift and we've marked our imbalance, the next thing we're going to do is hop onto the higher time frame and simply identify opposing liquidity. Actually, if we go on if we have any low hanging fruit, now we don't have any low hanging fruit in regards to here. You could target this imbalance for opposing liquidity right over here, the 50% of this imbalance, like so. Or what I would do, I'd look for the most recent liquidity. If I go on the high time frame, I'd say this high right over here would be the best form of liquidity that we can take. Now if I quickly play price out, see what happens. You can see we're tagged into our zone. Extend this a bit. Price plays about, and bam, we have touched take profit. If I quickly play the market out just so I could see where would have been the best. So yeah, you can see you could have held this trade for a crazy amount for the break of these equal highs right over here. Again, the best thing you want to do with this strategy is simply target low hanging fruit, which essentially means the most recent form of liquidity. Again, you could have even done these equal highs here, which is the one that we marked out before our actual New York kill zone, or you could have done the 50% of this imbalance. It's completely up to you. Again, trading is perspective based. Someone might see something different to you. Again, there's no wrong or right when it comes to targeting liquidity. Obviously sometimes you might get a higher risk for trade like so. But that is the end of the video. If you guys do have any question, please feel free to drop them below in the comments. I hope you guys have a nice day, and bye.